BofA with a big call this morning. Get long the 10-year, targeting a move to 225. Mark Cabana and the team over at BofA looking at this. We believe today's 10-year rate offers an attractive level to buy. Our forecasts point to inflation peaking this quarter and falling steadily in 2023. We believe this will reduce the panic level around inflation and allow rates to decline. A man with a view on this, I'm sure, is JPMorgan Asset Management CIO Bob Michele. Bob, let's start there. What do you make of that BofA call, Bob, and we can take it from there?
I think it's a reasonably good call. We've had a tremendous backup in yields. We think that the Fed gets to about 3% on the Fed funds rate over the next year, and that's a pretty good spot to pause. It gets them to a positive real yield on their 2% inflation target. The curve should flatten around there, and you have to appreciate the near doubling in 10-year yield since the start of the year. So finally, after a couple of years, we're getting the bond market to the right pricing. Frankly, I thought we would have had more repricing at the end of last year. Looks like we saved it all up for this year.
Bob, how do you judge that 3+ on Fed funds is sufficient, that 3 to 3.5 is sufficient? How do you make that judgment?
Well, I don't. And I think about where is a reasonable place for them to get to, how quickly, and where do they stop? And I think you have to listen to what they're saying, and they're desperately trying to get the market to agree to front-loading rate hikes. They know how far behind inflation is, and I hear you and Kelly talk about, real yields are about 0 on the 10-year. That's deflated by everyone's imaginary guesstimate of where inflation will be over the horizon, not where actual inflation is. So they've got a battle royal on their hands, and I think they're going to really press. And the market will take comfort that we have a serious Fed looking to rein in inflation.